latest U.S. employment report shows financial sector jobs remained unchanged in November. But in the past few years, there have been major job losses in banking around the world. I spoke to some experts to find out if those jobs are coming back and what effect they will have on cities whose economies rely on them. In the past year, 1,200 jobs have been slashed on Wall Street, and that's not including Citigroup's recent announcement to cut 11,000 workers, many of them in New York. London's Canary Wharf has lost more than 5% of its financial services workforce. Globally, roughly 300,000 jobs in the sector have been lost over the past 2 years.
There is one word that describes what's taking place in global banking, and that one word is downsizing.
Banks and their share prices have been struggling to recover from the financial crisis. They face tougher regulation and a weaker global economy, making it more difficult to raise revenue. For many, their returns are less than their cost of capital. Bank analyst Mike Mayo says unless banks generate more revenue next year, there will likely be more layoffs.
Some of these jobs are never coming back because they relate to products or certain businesses that had bloated infrastructures that were never corrected after the financial crisis. On the other hand, financial services is still a great growth segment because you're seeing more people trade more securities in more markets more than ever before.
Mayo says while there may be more job cuts in developed markets, areas that service developing markets like China and India will likely go on a hiring spree. If banks do hire in the U.S., Mayo expects them to do so in smaller cities, where the costs of labor are lower than in financial capitals. So what does this mean for the economies of cities that rely heavily on the sector, like New York and London?
Basically, if you're providing a typical service, any kind of day-to-day service, whether you're selling gum or selling a $1,000 bottle of wine, you're going to get hurt.
And there's also the loss of tax revenue for the cities, which can be quite substantial because those who work in the financial services industry are traditionally well paid and tend to pay higher marginal tax rates.